Good day to all. Today, in this video, we'll try and understand what do you mean by set-off and carry forward of losses. As a part of income tax, when you file your direct taxes, there is a concept called set-off and carry forward of loss. Now, in general, what do you mean by set-off and carry forward of loss? According to the direct taxation, we have 5 sources of income through which an individual can generate revenue or income during a given period of a financial year. That is called income from salary, income from house property, income from business or profession, income from capital gain, and income from other source. Now, it doesn't mean that every source of income should generate only profit or gain for an individual. At times, if I start running a business or if I sell any property, I might end up by making losses. So this concept called set off and carry forward of losses under direct taxation explains us on what kind of losses earned through a particular source of income can be set off against which source of another revenue that has been generated by an individual. So we'll try first and understand what do you mean by set off of losses. In general, set off of losses means adjusting any loss that you have got against any other profit or income that you have earned during a particular period of year. As I told you in the example initially, it doesn't mean that all businesses that we start should earn profit. There are businesses that you start that ends up by making profit. Or in case if you have a house property, it doesn't mean that house property should be occupied by a particular resident throughout the year. It can be vacant as well. So if your house is vacant throughout the year, you end up by making losses. In the same scenario, let's say I'm selling a land or a property that is there in my name. It doesn't mean that you should always sell it for profit. You would make loss as well. So these losses can be set off against any other profit or income, which is called as set off of loss. So this concept teaches you the losses that are not set off against income in the same year, but can be carried forward to the subsequent years for set off against incomes from those years. So any income that you're not able to adjust during a given period of time is said to be carried forward. So in this entire video, we'll try and understand about what do you mean by set off and set off of losses, where set off of loss will be of 2 types, classified as inter-head set off and intra-head set off, wherein if any loss is not being able to set off, then you try to carry it forward to the next assessment year and you try to set it off against the income that you generate in that particular year, which is called as carry forward of losses. So as I told you, when you talk about set off of loss, we have 2 types of set off. One is called as inter-head set off and other one is intra-head set off. So firstly, we'll try and understand what do you mean by intra-head set off. So generally the word intra, okay, means within a particular unit or within a particular premises. Similarly, an intra-head set off refers to any loss that can be adjusted towards the same source of income. Therefore, I've given you an example here which says that any loss incurred from business A can be set off against profit from business B. So what is the underlying term here? The income that is generated is a business income. So in case I run business A and I end up making loss, and I also have business B, but I end up making a profit, the loss that I generate from business A can be set off against the profit that I've generated under business B. So this concept is called as intra-head set off, where I'm trying to adjust the same kind of loss against the same kind of income that I have generated. Now, there are few exceptions under Income Tax Act 1961 to go under with this exception, where it is called as exceptions to intra-head set-off. The first one is any loss that you generate from a business, speculative business, that is buying and selling of shares, debentures, etc., will only be set off against the profit of speculative business. One cannot adjust the loss of speculative business within the income from any other business or other sources of professions. Similarly, any loss that you incur from owning and maintaining of horse race, which is also called as casual incomes in India, can be set off only against a profit from such an activity by owning and maintaining of horse races. Since horse race comes under income from other source, you cannot say I also have an interest to be received from FD, which is income from other source. So I'll try to set off this loss that I've maintained a horse race against the income that I've received from FD. That is not possible. Therefore, this is called as exceptions to intra-head set off, where if you incur any loss against a casual income, that can be set off against profit of a casual income only, especially related to horse races. And thirdly, any long-term asset that you sell and you incur a loss, this only will be adjusted against long-term capital gain, wherein it cannot be set off against short-term capital gain. In the sense, in simple, short-term capital gain can be set off either against short or long-term, wherein a long-term capital loss can be set off only against long-term capital gain and not against short-term capital gain. And the last exceptions to this rule is that any loss from a specified business will be set off only against profit of specified business. Now, again, what do you mean by specified business? According to Income Tax Act 1961, there is a provision which clearly tells you what is specified business. So we can go through accordingly. But the loss from any other business or profession can be set off against profit of that specified business itself. Moving on to the next concept called inter-head set-off, where a loss that is incurred from one particular source of income can be set off against some other source of income or gain that is being generated through some other head of income that you have generated. So, for example, let's say any loss that you have incurred from house property, let's say, can be set off against the income that I've generated out of my salary. So what am I doing here? Income from salary is different, income from house property is different. But what am I trying to do? I'm trying to set off one source of loss that I've generated against another source of profit that I have generated. So this is an instance for inter-head set-off. I repeat, where let's say I have a loss from a house property that I have with me. This loss from house property that I've generated before filing taxes can be set off against any salary income. So this is called as inter-head because I'm setting off the loss that is generated from one source towards another source. Similarly, let's say any business loss other than the speculative business can be set off, let's say, against salary income or house property income. So these are some examples of inter-head set-off. But one needs to clearly understand that the following losses that are listed here cannot be set off against any other heads of income, like speculative business losses, capital losses, loss from an activity activity run by owning and maintaining of horse races. Moving on to the next concept, which is called as carry forward. So till now, what we have understood is what do you mean by set off of loss, where we have seen two categories of set offs called inter-head set off and intra-head set off, where we have seen the exceptions to the rule as well. Now, what if a particular source of loss that is generated by a particular head of income is not being able to set off? Then what do? Then we try to carry it forward to the next assessment year under the concept called as carry forward of losses. So what do you mean by carry forward of loss? In case if any head of income has resulted you in a loss and it is not being able to set off against any other profit, either through inter-head or intra-head, that particular unadjusted losses is said to be carried forward to the next assessment year when an individual files his or her returns. So such kind of losses that is being carried forward to the next year is called as carry forward of loss. Now the question here comes is, for how many years do you try to carry forward such losses for a particular individual? The answer is very simple. It depends on what kind of loss have you generated. For example, let's say a loss that is incurred by owning and maintaining a horse that is left for racing can be carried forward for the next 7 assessment years. Okay. For example, this year I've made a loss of 1,50,000 by owning and maintaining a horse that I've left for racing. This 1,50,000 can be set off only against what? Profit against horse race. So if I don't have a profit the next assessment year, I try to carry forward to the next assessment years. So like this, I can do it for 7 consecutive years. And after 7 years also, if I'm not able to set off completely 1,50,000, then that is to be waived off or it will be cancelled. So that is the rule pertaining to carry forward of losses, which depends on different types of sources of loss that you have incurred, and maximum lag that you have to carry forward your losses to the next assessment years is a period of 8 years. So as I told you, it depends on what kind of loss you have incurred. Depending upon that, the carry forward rule is applicable. It can be carry forward. Some losses can be carried forward for the next 8 assessment years. Some losses can be carried forward for 5 years. Some losses can be carried forward for the next 7 consecutive assessment years. So it depends on what kind of source has resulted you in a loss. So hopefully this video has given you a clarity on what do you mean by set off and carry forward of loss. Thank you.